Hello everyone, welcome to EPK Capital. Here we simplify wealth management and investments so you can build wealth for generations. As a bonus, I have created an in-depth guide to the 7 costly tax traps for high net worth NRIs, a strategic report on avoidance and compliance. You can download it simply by clicking on the link in the description. Let's get started now. Investors are reeling today as a perfect storm hit the Indian stock markets. A massive corporate scandal involving one of India's largest conglomerates, combined with weak global cues, sent the Nifty and Sensex tumbling on November 21st. From the Adani bribery charges to the Federal Reserve's latest curveball, here is your detailed market wrap of the last 24 hours. Let's look at the damage. The benchmark indices snapped their 2-day winning streak, ending the week deep in the red. The Nifty 50 slipped below the critical 26,150 support level, closing down nearly 100 points. The Sensex followed suit, shedding over 350 points to hover near the 85,250 mark. The pain was concentrated. The Bank Nifty underperformed significantly, cracking over 370 points to trade below 59,000. While we saw some defensive buying in auto majors like Mahindra and consumer staples like Asian Paints, they weren't enough to offset the carnage in the infrastructure and energy sectors. But the undisputed headline of the day and the year is the crisis rocking the Adani Group. In a bombshell development late last night, the U.S. Department of Justice and the SEC indicted Chairman Gautam Adani, his nephew Saga Adani, and other executives. The charges? A massive alleged bribery scheme involving over $250 million. U.S. prosecutors allege that these bribes were paid to Indian government officials to secure lucrative solar energy supply contracts worth billions of dollars. The reaction on Dalal Street was immediate and brutal. Adani Enterprises locked at a 20% lower circuit. Adani Energy Solutions also hit the 20% lower limit. Adani Green Energy crashed nearly 19%. And Adani Ports tanked over 10%. The fallout had immediate financial consequences. The Adani Group has announced it is scrapping a planned $600 million bond offering, citing the indictment. In a statement, the group has denied the charges, calling them baseless and promising to seek all legal recourse. But the damage to investor sentiment today was undeniable. The financial shockwave quickly turned political. Leader of the opposition Rahul Gandhi held a press conference today, demanding the immediate arrest of Gautam Adani. He stated that the U.S. indictment vindicates his party's long-standing allegations and renewed his call for a joint parliamentary committee probe, directly accusing the Prime Minister of protecting the conglomerate. On the other side, the BJP fired back. Spokesperson Sambit Patra addressed the media, stating that the law will take its own course and that the party has no reason to defend any private individual. However, he sharply questioned the timing of the indictment, coming just days before the parliament session, and pointed out that the states where the alleged bribes took place, including Chhattisgarh, Tamil Nadu, and Andhra Pradesh, were ruled by opposition parties at the time of the alleged crimes. While Adani dominated the headlines, global macro factors played a major role in today's bearish trend. Overnight data from the U.S. showed initial jobless claims at 220,000, significantly lower than the expected 227,000. A strong labor market might sound good, but for the markets, it's bad news. It gives the Federal Reserve more room to keep interest rates higher for longer. Following this data, Fed officials made hawkish comments, casting doubt on a December rate cut. This triggered a sell-off on Wall Street, with the Nasdaq tanking 2.2%, and the S&P 500 dropping 1.6%. This risk-off sentiment spilled directly into Asian and Indian markets this morning. In a twist for global trade, President Donald Trump made a move today to remove tariffs on Brazilian beef and coffee. While this aims to lower consumer costs in the U.S., it signals a shifting trade policy that keeps global investors on edge. Closer to home, we got the flash PMI data for November. The Indian economy continues to expand, with the composite output index at 59.9. However, the manufacturing PMI dipped to a 9-month low of 57.4, showing that while growth is there, momentum is slowing slightly. In the currency market, the rupee remains under pressure, trading at 88.74 against the dollar, reflecting the broader strength of the greenback. And for crypto investors, the sea of red continues. Bitcoin has slipped below the $86,000 mark, trading around $86,300, down nearly 3.5% in the last 24 hours. The combination of regulatory fears and fading rate cut hopes has triggered a sharp sell-off in digital assets. To summarize, the Indian market is currently sandwiched between a domestic corporate crisis and a global liquidity squeeze, with the Adani saga likely to dominate headlines and parliament sessions in the coming days. Expect volatility to remain extremely high. That's your market report for November 21st, 2025. Stay cautious and keep watching this space for updates. Next step for you. Would you like me to generate a thumbnail text idea or a SEO optimized description for this video to help with the upload?